And welcome to the Trading Zone. I'm Joe Teague. Thank you all for joining me today. We're going to be talking about meme coins and the Trump coin and the market and everything else in between. Hope you're doing well. Hope you had a nice long weekend. Please send me some condolences from my beloved Lions. What a wonderful season and what a terrible way to end it. Playoff losses just hurt more than normal losses. But I think I've gone through my grief and I am now ready to go again, start the week. It's a good thing it was a long weekend because I had definite grief there, just hanging in there, wishing, bargaining, pleading that the Lions were still alive. But that's not the way it worked. Anyways, it's been a fantastic weekend for me. Nice to have a long weekend. Interesting to see all of the fanfare going on in Washington D.C. That was interesting to watch. And before that happened, we had a little bit of a roller coaster event for cryptocurrency holders over the weekend. We had we saw this action going on. We saw the Trump coin pop, settle back down. It's actually hanging in there fairly nicely for a lot of meme coins. And it is exactly like Trump. It's very polarizing. People hate it. People love it. People think it's the greatest innovation since sliced bread. And people think it's a total scam. So we'll get into what the reality of all that is as the show goes on. Elsewhere in the world, we're getting investors out there saying, hey, we like the market right here, but we're a little nervous, we want a little protection while we're going higher. And boy, yeah, that's exactly what I'm seeing. So that's no surprise for me. That's exactly what we're doing at Equity Armor for sure. But yeah, people are looking at puts when they're cheap. People are looking at call spreads when the VIX is lower. So yeah, we're going into that for sure. That's what we do every day on our show, talking about volatility as we go. And yeah, we're looking at other analysts out there saying they're looking for VIX upside, and also that the VIX is very sensitive to movements in the S&P 500. This is not something that's very surprising to us. We're seeing the VIX moving more per little tick move in the S&P 500. That's what this strategist, Shane Carroll, UBS, is talking about. And that makes a lot of sense. Very sensitive. The market is reacting, fixated, and on a lot of little moves. As we are welcoming here Brian Stutland to the pre-show. We're going to have a quick show here, everybody, just getting everyone's expectations in order. But yeah, so we're just talking a little bit about volatility and the VIX, and no better person to talk to when we bring that up than Brian Stutland here. Brian, can you explain to the people when the VIX, what it means that the VIX is more sensitive to moves in the S&P 500?
Well, that just really means that the volatility of volatility is very sensitive, meaning that the VIX is measuring how much the S&P, or what traders believe the S&P will move in the next 30 days. And so when that sensitivity of the VIX itself increases, it's basically a harder gauge of what the entire market is going to do going forward. I think it's somewhat of an indication that there's a little bit of lack of liquidity in the marketplace. When the VIX kind of settles into a level, that's also expectations that the people are feeling very, very comfortable about where the market's at in terms of the level of volatility. And, look, Joe, we're entering an age, I think, where starting now, especially in the first 100 days of the Trump presidency, where, policies, executive orders are going to come out. It's going to be market moving. There's going to be some uncertainty about what will take place there. And so we're, I think, very poised to be set up for heightened levels of volatility relative to the past, where the VIX, on the lower end of 15 is probably the low end of the trade.
Yeah, and that makes sense to me, like with this extremes, the environment that we're living in, like maybe it's a little bit binary to use a coding computer word, but like the market's either going to be fantastic or terrible.
Yeah.
And every tick higher in the market, people are putting all their chips on fantastic. Every tick lower in the market, people are assuming, oh, let's go all the way back over to terrible. That's what we're seeing with these VIX moves. We're seeing wide ranges in that. We'll get into that in a little bit when we get to our skew. Again, this week is going to be inauguration week. This is basically going to be inauguration 100 days. Like this is going to be 100 days of uncertainty. What's going to happen? And right now, maybe a sigh of relief. Tariffs were not instantly installed. There is a talk of a 25% tariff that's going to be on Mexico and Canada if they don't get their border straightened out. Sounds to me like a bargaining chip, laid out there by Trump. But we'll see what happens. A lot of these tariffs just could be a different type of bargaining chip to the Congress. If Trump wants to get a budget passed with some tax cuts and maybe potentially higher deficits, he can say to them, hey, we're going to cover those deficits with tariffs that he's just laying out there, but might not actually put on.
Yeah, I think we all know that tariffs can have an inflationary effect, although not necessarily. It just might reprice change what the value of the U.S. dollar is relative to other currencies, relative to what people are willing to be paid for in other areas of the world. But certainly tariffs can have an inflationary effect. So I think it's just going to be a stepwise. Let's see how it goes. Let's do this one step here. Let's see what kind of effects it has, and then see what happens.
All right. Well, thanks again, everybody, for jumping in. We're going to start the show here. Remember, we're live right now. Any questions you want to throw out there, we're going to see. We'll answer them right now. You want to ask us offline if talking to a live audience is too intimidating to you, feel free to just email us or catch us after the show, or leave a comment if you're watching this later on. But thanks again for joining in. It means a lot to us that you do so. Remember, next week before we get into the show, we're going to be at 10:15 on Mondays. So we're going to new time next week. Earlier, you guys can't get enough of us. Trader wants more equity armor, so we're going to be on first thing on Monday so that we can get that week started right. Okay. Anyways, Brian, you ready to start the show?
Yeah, let's just get into it. I'm Brian Stutland here, Equity Armor Investment Portfolio Manager, here with my colleague Joe Teague. We're live here on the Trading Zone, sponsored by the MIAX. Super excited to have you all here. It's a show where we talk about the markets, we talk about volatility, the S&P 500, and we also give a trade of the week. So stand by. This week, really the big topic, I'll just kind of tease it out there, is Trump, and I mean the Trump meme coin. What meme coins mean in general, what cryptocurrency means. We're kind of going to get into it on that. So I think we'll have an interesting conversation, probably one that's maybe more liberal sided from Joe and maybe a little bit more conservative sided from myself. But we're both kind of like near the middle here on both of these sides. But we'll give both sides of the coin, pun intended, and it's going to be a big week this week.
Yeah, we expect a lot of executive orders. There's already been a ton going through. I think the big thing for me, once we get past these executive orders, is going to be what's going to be in this big budget bill. That'll be coming down the line the next coming week. So it's going to be a lot of talk up until then, until we actually get that bill. That's going to be really big for the market. But there's a lot going on even before we get to that point. There'll be consumer sentiment Friday. Maybe there'll be a little inflation data. Not a ton of real big economic earnings this week, or economic data this week. Some earnings, nothing earth-shattering. We're just kind of getting started here in the earnings season. Going to get some big ones coming up next week. But this week, Netflix, Texas Instruments, American Express, Verizon. It should be interesting. I mean, it's going to give us a trend of what we're going to see starting. Last week, we talked about the CNN Fear and Greed Index was extreme fear. Brian, this is fascinating to me. This AA2 investor sentiment is extremely bearish. This is a 52-week high on the bearishness. So there's not a lot of bulls out there, which the contrarian in me is saying, oh, this is great. I love this. I want to buy the market right now.
Yeah, I think we talked about it last week too, how interest rates affect the market, and with the 10-year dropping in yields over the last few trading days, the market kind of ripped through some of this resistance on the upside, and then you couple with this bearish sentiment. I think all eyes are upward and outward.
Yeah. Speaking of sentiment, we got the skew index here. We always look at this as kind of a leading indicator for the VIX. It's telling us it's going lower right here. Now, this obviously is an area where, hey, when it gets lower, it's time to start looking at this for the long side. It's kind of tricky in here when exactly that trigger is going to be. Is something we're looking at this morning for our clients and our positions in our funds with this. But we're very close to a spot where, hey, volatility's come far down really quickly. When do we think about loading up a little bit as it's coming down here?
Yeah, I think we're starting to see call buyers come into the marketplace on the S&P 500. And to me, sometimes when I see a little bit over exuberance into that, especially we're getting towards that green trend line near the bottom there, in terms of the ratio of call buyers relative to put buyers. As we get towards the green area, that means there's significant call buyers and probably met with some sort of level of support. And to me, I would probably want to be an owner of volatility down at this levels. Like we just said, I think the market's going higher, but it's probably going higher, either gapping higher to new all-time highs, or it's going to fail this little breakout. So
yeah,
the volatility.
Bottom line is this is the skew index. This is the 25 delta puts versus the 25 delta calls in the S&P 500 1 month out. As this gets lower, this is just like kind of people buying calls more so than puts here, or more interested in calls than puts. I think this is likely to turn around before the VIX does. So that's just why we're going to be paying close attention to this. When we see this turning around, I think that's going to be an important spot for us to looking at VIX, specifically at these VIX futures, Brian, which have come a long way in just a week. A week ago, we had the VIX up here. Boom, big crush down here. And of course, the futures acting accordingly.
What's unbelievable is a month ago, VIX was up above 27. I think, how quickly did that come off from those levels? That was unbelievable.
It was just a heartbeat, right? Just a moment in time we captured here just on this weekly chart. But yeah, this is something else. This is kind of all over the place, but it's kind of exactly what we were saying earlier before the show. The market is very sensitive. The VIX is very sensitive to these small moves in the market. So we're getting little moves in the market, big moves in the VIX. It's something is really exciting for a volatility trader like us to see. Oh, there's opportunity to be trading volatility on top of just stocks.
Yeah, I'm looking at this and it's interesting. I think to be a VIX future trader, to be on the buy side of it, I'd probably want to see this like current skew drop below the 2-month levels, where then I'm like, okay, maybe it's a little bit overextended to the downside, because then I can expect to pop somewhere upwards towards that green area, which was a week ago, as sort of like a measure of mean reversion. So I think there's going to be some good opportunities setting up to be a VIX future buyer. Probably want it to go a little bit lower from here. Just looking at this VIX futures curve.
I think we're pretty close. We're past Martin Luther King holiday. We're getting into February, going into March. This is usually the time of year where you start to see volatility pick up. March and October is like the volatile months. So just keeping that in mind. They're just getting ready for that. People sometimes buy volatility into February here. So just something we'll be watching very closely, just like we're watching the S&P 500 very closely. This was where the VIX had a little head fake. We had a little head fake last week, and wow, went below this head and shoulders, and then we had a failed head and shoulders just essentially. And now we're racing to the downside. Sometimes with failed moves become fast moves. This is really interesting. And when you put in the 50 and 200 day moving averages in here, Brian, kind of tells another story here where, boy, we look like the 50 day was surely, old support turns into new resistance. And we wanted to test this 200 day. I think the market was just gearing up for that all across the board. It never happened. It didn't happen in the NASDAQ, which is right here. Absolutely like a ton of room here between the 50 and 200 day moving average. That would have been a significant correction. Never happened. And really the best looking chart of these indexes, the leading indicator for me, which is looking a little bit better as this day's gone on. We're actually like up here right now, is this semiconductor index. This is just fantastic, Brian. We're clearing through this level. This is the leading indicator for me. These are leading indicator because people need to buy computers to get into like the next quarter. So people do that a quarter in advance. So this is really important for me. I think this is great for the economy, great for the stock market, and really where I'm saying, hey, the market's going to be following here.
Well, I think we probably should trade this at the end of the show for the weekly trade, right, Joe? Do we have something on the SMH later? I guess
we might. And of course, all of this is happening because what we say last week, Brian, we need to see the 10-year yield turn around. The 10-year turns around, everything's going to look different.
Seeing that back off definitely gets me excited to own techie kind of growthy kind of names in this market environment. You laid out a whole bunch of pictures of technical failure to the downside, rips back to the upside. So it's kind of an exciting time. We're going to get later in the show. We're going to do a trade on SMH on how I would play it with this potential cup and handles breakout potential coming on. But in the meantime, you've seen some of these technicals here that line up to be more bullish than bearish, even though, like we've said, we probably want to own some VIX futures. That's okay if I own a hedge and I'm long the market. If the hedge kind of holds up and I can continue to be long the market, I'm okay with that. And so I think both long volatility and long stocks is a great way to trade it right now. That's what we do in our mutual funds. So that's, full disclosure, that's how we're set up for clients. But I mean, I think it's the right environment right now. It's paid off. Let's call it the last 14 months. I think that continues.
So let's get into the big story. We're running short on time. Of course, we want to get through this quickly. I texted this to you this weekend, and you said, "Oh, your liberal conspiracy theories are going off the wild." I guess now Wall Street Bets is one of the most liberal places you get your news from, I guess.
Yeah, right. Yeah, I mean, I guess there's two takes on what's been going on here, right? So, just for folks that don't know, the Trump coin, the meme coin, was launched prior to the inauguration. This is a coin that was sort of, had the Trump symbol of fight, fight, fight in it. And the value of that coin just skyrocketed to billions of dollars. And kind of spurred our discussion, Joe, between, is this sort of move by a political figure a way to sort of money launder, for lack of a better word, or is it a measurement of true popularity? Like, for example, Nike got Michael Jordan to back it, right? But behind the value of a Nike shoe, let's say, or a Nike product was both the product itself and the demand for somebody to actually own a basketball shoe and the name Michael Jordan, right? So it was a combination of popularity and actual product that people bought Nike shoes for. In this sense, the coin is purely being bought for what you view as the popularity of Donald Trump, which is kind of an interesting take that we've never seen before. So that's one side of it. Is this a way to make a bet on popularity? Or is it a way to say, hey, if you really like me and you support my campaign for political figures, are we getting into a troublesome area where people can sort of circumvent the laws and put bets on a political figure and funnel money into that certain aspect? I mean, what's your take on this, Joe?
Yeah, well, bottom line is I like blockchain. I'm not sold on any one coin yet. Bitcoin's obviously the best one, but I'm not ready to say that Bitcoin is going to overtake the American dollar anytime soon. In fact, I don't think it ever will. That's just my personal belief. So maybe I'm a little bit biased here. More biased is I don't think that a politician should have a meme coin. I don't think this is this is a very unique one where 80% of the float is being held by the founder. So 80% of this coin is being held by Trump. Most coins are more decentralized. They're equally spread out between who owns what. So that's another big red flag warning sign. Now, it is good that there's a lockup period for that 80%. So there's a 3-year period where it can't be sold. That protects it from some of the other traditional rug pulls that we're familiar with, where they just go up and then the founder sells it all out immediately. So that's not going to happen, at least for the next 3 years. But it does signal 3 years from now, maybe a potential for things that I would say not fair play. You could call it corruption. I don't know what you want to say, but there's definitely a pay for play opportunity for people who want to get a favor and not have it trackable as easily as writing a check.
Well, not trackable in the sense that, hey, you could say I'm just investing in this meme coin, not for pay for play or whatever. So obviously everything's recorded. You have to have an account if you want to sell the Trump coin, you turn it to US dollars. So there's a conversion there. There is money tracking, but your motivation to buy it can be easily masked. And so that is, that's right. I think, 80% owning of the float seems way too high for a politician. If we're going to keep some guardrails in on terms of like what people can contribute to campaigns and whatnot. Now, having said that, I still go back to the fact that I do think it's a very unique way. This is both good and actually horribly bad, where people can measure popularity by owning a person's particular meme coin that they in itself own a majority stake in that coin. To say, hey, if I like this person, just as a souvenir, you'd collect a souvenir from somebody. This becomes a valued souvenir of someone. What's scary about this, though, is that if the value or the popularity of something, this is kind of entering like a monarchy type society where people, tax dollars go to the king because he's the king and we want to support the king. And now all of a sudden you're creating this currency that if it becomes so popular, it could end up taking over reserve currencies in the world as another means, because, hey, I rather own the popularity of Donald Trump, let's say in this case, for example, over, call it the euro or whatever. And then you're talking about levels of volatility in the currency markets that will be astronomical. Like as popularity changes, because that can change very quickly, can change on a dime. The value of these coins can move. So it's kind of scary. This is the one negative of crypto that I have problems with, because it's decentralized, okay, but decentralized means anarchy ultimately. And we've seen Bitcoin itself, the level of volatility of Bitcoin is just drastically higher than the value of gold. It's drastically higher than the US dollar. And to me, then it becomes difficult now to value your goods and services in exchange for that. So that's the one worrying part of all of this.
If I were a true believer in Bitcoin and been holding it since 2014, then I would hate this, because I would say people are going to look at all coins and cast them in the same shadow. They're going to say, oh, they're all just a fraud. They're all just, just the speculative whatever. There's really no value in any of them.
Well, what's interesting, Joe, that you bring this up. I got to say this, though, because I kind of use this as a lesson to teach my 9-year-old about just investing. And we went on the Kraken app to look at, the value of all these meme coins. And I showed him like charts and how people buy and sell. And he started getting curious about, well, what makes the price go up and down or whatever. You know what his conclusion was after all of it? He's like, investing in coins is stupid. Like, can I go buy like the Atlanta Braves publicly traded company, which I'm thinking about like buying, that's valued at $2.5 billion, where I actually own something, or Google or Apple or something that has like something? He's like, I don't get it. These are just coins, and it looks like.
And that's actually something really frustrating about these coins, is like blockchain opens up the possibility of having like a coin tied to a public company, a coin tied to something with real value, where you can get paid when good events happen and be rewarded by good decisions. That's really frustrating when you see these things happen. Final point. I know we got to hustle here because we have a lot of time today. It does add a lot of liquidity to the system. It does add like a lot of paper value to the system. Some people might use their gains to use a trade on margin. It adds a big layer of risk for me. So people are holding on to Trump coin, buying other things with that, or there are going to be futures on Trump coins with leverage. It does add a lot of margin and uncertainty. So it's just going to add volatility. I know it's going to be in cryptocurrencies, but we talk about volatility being a ripple effect. If there's going to be volatility in one aspect of the market, it's going to go to all the other aspects of the market. Real quick, Brian, I know we're running short on time. We wanted to be finished because there's another show after us today. Let's jump real quickly into the trade of the week, unless you have one last thought real quick.
No, let's get at it. I think the semiconductors, NVIDIA, all these guys are really prudent given what we've been talking about.
Real quick, patting ourselves on the back. Last week we did this trade here on a real heater. Of course, the previous 4 weeks were all fantastic. This last week, we put this one on for 0. Sold March 120 put, by March 132 call. Selling the July 175 call in NVIDIA. It's now $4, $4.10, even higher as we speak. So looking like a nice winner. And hit the button. Okay, this week we're doing the semiconductor index. Talked about this beautiful cup and handle forming earlier. Really, we're trading above here, which is just really good. The trade, Brian, is very similar. We're looking out later in the year. We're going to buy the at-the-money call, sell the July 300 call. This is just collecting money to get long, something we want to get long anyways.
Yeah, and if it rips through that sort of resistance line, I think there's upside potential. Essentially, we would then you'd exercise the 260 call, be long the stock, short the July 300 call, almost like a buy right. And if it goes down, the value of the 260 call will sort of disappear. Then you're not stuck with anything, and you have the decaying factor of that July 300 call, which we'll give updates on that and how to handle that if SMH were to sort of bump into this resistance and head lower. But I love this as an upside bull trade.
Okay, I think we got to hop now. We got on a hard deadline. I want to thank everybody for joining us today. If you liked what you see, make sure you join us next week. We're at 10:15 on Monday morning. This is Equity Armor Invest. I'm Joe Teague of Equity Armor Investments, and with me is
Brian Stutland here at Equity Armor Investments as well.
Have a good week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.